So that's another strategy for an economist. So without further ado, I think I can let Julian Suresh on board and go along with his topic of investment market outlook. Okay, so how are you, Suresh? How are you doing?
Hello. I'm doing fine today. Thank you for having the session. I've listened to your previous speakers, very good actually, and I hope to be able to continue in the same spirit.
Okay, thank you everyone for coming back to our session, and thank you Suresh. So he will be sharing with us on the near-term investment outlook on multi-assets and multi-geography. Okay, I think the floor is yours, so I pass to Suresh.
Okay,
Please go
let me
ahead.
just share the screen, my presentation. Keynote Forex. Okay, everybody can see, yeah?
Can, sure.
So generally, I'm from Red West. We are a boutique fund management and wealth management company. We actually help a lot of individuals manage their own money. But at the same time, we also recommend where to put money depends on how the markets is going. So before I go on into the actual market view, I just want to tell you that this may not be the usual explanation about the markets that you might have seen before. Generally, what we do is we watch the market in detail. Of course, I won't be going in too much detail about the markets because it'll take forever. One-on-one, we can always talk about it over tea. But other than that, we just watch the market movements in a detailed basis. And then at the end of the day, we'll find out what is actually influencing it. And then we put on a scenario. So basically today, we will only be concentrating on this market observation and basically some recommendation after that. For the whole process, of course, you come to us, we can actually do that. So what I will start with is to talk about generally what the market is moving like, what are the influences of the stock market, the bond market, and currency market. And from there, we can work together and to find out basically what is influencing the market and how we can go forward. So you can actually participate in this process also. So I will usually first start out with this particular chart. This is just to show you that the ringgit and the dollar movement. So, usually when we talk about ringgit, we talk about, ringgit is weaker because the government is not good, or the oil prices are low, or we are losing a lot of money overseas. But generally, at the end of the day, this chart will actually show you that the value of the ringgit is very much dependent on the value of the dollar, because it's dollar ringgit. So if the dollar actually goes up, the ringgit will weaken. So in that sense, this basically shows you that the movement of the dollar precedes or actually drives the ringgit movement. And there is some dark points here, like, dark points here, Bank Negara, Hint, COVID optimism, Malaysian COVID MCO. These are the periods where the ringgit breaks with the dollar because of local domestic factors overpower the international factors. But overall, generally those are very few in happenings, very few and far in between. And if they do happen, it represents a good opportunity to move in the opposite direction. So for those who are trading Forex, not on a daily intraday basis, maybe on a week basis or something like that, this kind of approach would actually help. So what we can see here is throughout the time, there has been different influences over the market. Initially in 2016, 2015, actually 2015, there's a big storyline going through the courts right now, right? That one was a major factor. But in 2015, going 2016, right into a bit of 2017 here, it's all driven by central bank expectation, what the Fed is going to do, what Bank Negara is going to do. So you can see here, there's a big gap between the dollar and ringgit. And when Bank Negara just hinted that they're going to tighten monetary policy, the ringgit moved around from this level all the way down to 3.8. This was right before the election where KLCI was very strong. Then after that, the dollar moved back up, ringgit of course weakened, and we had the trade tensions followed by COVID. So remember, long time back, we were talking about trade tariffs, right? That's all we could think about, what China and the US doing. And everybody thought, the world was going to end because both of them are fighting. And then we talked about COVID, so COVID was a big thing. See, the fact that I'm saying that COVID was a big thing, it just beggars the belief that right now we're really not talking about it. It was just dominating everything right up to last year. And after the Omicron hit, we forgot about it, actually. We forgot about it. Look at the malls, it's all full, right? So in that sense, that also caused the movement. So you can see here, when COVID hit, the ringgit weakened a lot. And then after that, with the lockdown optimism and everything, the dollar actually weakened and the ringgit strengthened by quite a lot. And then you can see here also, because of COVID worries, ringgit weakened and optimism, ringgit strengthened. Recently, the story has been, of course, due to inflation. So what has really driven the ringgit weakness of late has been the fact that the dollar strengthened a lot. But the jump in ringgit at this point is actually due to the yuan weakening sharply. So again, it's a very externally driven market rather than anything internal. Throughout this time, Malaysian growth has actually been quite decent. Bank Negara has been good. We can talk a lot about the government, but the fact that, our government's bureaucracy is actually very, very good. I mean, we can have complaints, but, if you go any other places, might be a different story. That is why any shift in government at the top, it really doesn't affect a big market movement, because there is a certain confidence over the bureaucracy, the court system, the legal system, and everything. So, don't have to be so sad about it. Then what really driven the weakening of the ringgit here is because of the US CPI and aggressive Fed. So here you can see already the influence shifted from central banks here to trade, to COVID, and now back to central banks. Particularly if the Fed, this is the Fed, the stock hand, and this is all the other central banks. If the Fed continues to heighten or tighten, it will cause a widening of expectation and cause the dollar to strengthen. If the thing narrows, like the Fed relents a little bit, say, I'm not going to do so much, or the other central banks start to tighten in growth kind of environment, that will cause the dollar to actually weaken. So this is the current influence. We can talk about textbooks and everything, but this is what the market is telling us, and this is our observation itself. So from here, if the Fed becomes more aggressive, and especially with US growth being quite decent on an even keel, the dollar can actually strengthen. But the expectation over the Fed is actually quite strong, So you can see here also, why am I talking about the ringgit? Is because the ringgit movement is very much influencing the KLCI movement. So yes, we can all sit down and talk about how the KLCI is moving, based on fundamentals, everything. But here already you can see there's a very good correlation between the ringgit and the KLCI. Now, when I talk about correlation, doesn't mean, it's going to be true for the rest of, eternity. Is currently, this is what we are seeing. So in that sense, if you put 2 and 2 together, we have put in the reason why the KLCI, the periods where KLCI is positive and periods where the KLCI is negative. But one of the major influences has been the ringgit movement. So if the ringgit were to turn, then the sharp movement lower in the KLCI can be a turn higher, at least to target back to this range level. So that is why I spoke about dollar, ringgit, and now ringgit connected to the KLCI. And then if we move on to the next one, is the yields. So US yields have been moving higher. So when I talk about yields, what am I talking about, right? These are bond market yields. These are government yields where the government issues securities in order to borrow money from the market. So this is a 10-year yield. So basically this indicates where the government can borrow money for 10 years at what rate. So right now, Bank Negara, or not Bank Negara, the Malaysian government can borrow money at 4.286% for 10 years. And the US government can borrow at 3.15% for 10 years. So this particular yield, why am I talking about it, is because I find that the US government bond yields basically talks about the entire global health. It moves whenever there's the Ukraine war, it moves whenever there's COVID, it moves on trade, it moves on central bank expectation, it moves on everything, and that influences the ringgit, influences the dollar. So that is why I want to look at yields also. But also at the same time, the US yields have moved higher and also have resulted in the Malaysian government bond yields also moving higher. Why this is important is because, like here I mentioned, the Malaysian government can borrow money at 4.28% for 10 years. If Red West Corporation, who produces gloves, let's just say gloves, and I want to expand and I want to borrow money for 10 years, I cannot borrow lesser than 4.28%, maybe 2% above this level actually. So that means if this level continues to push higher, the borrowing cost of my company also moves higher. if the borrowing cost moves higher, there'll come a point where I don't want to invest anymore because it costs too much money for the returns to come back. So in that sense, if this yields move higher, it basically means it's more expensive to borrow money. So yeah, that's why I'm talking about yields very importantly. So what is happening here is the market, US yields have moved higher. I don't want to go through reasons, might take too long. And this is what's happening. Malaysian yields have already adjusted higher, which also means it might be a good time to invest in Malaysian government bonds, which I will talk about why it's later. Just remember, if yields fall, the portfolio, your value of your portfolio goes up. So it's opposite movement. So yields go down, the price goes up. So right now, the yields are high. You want to buy it in anticipation the yields go down or stay around the same level. So that's the key. So now what is happening? Why the yields are moving higher is because the central banks in the world are tightening policy. But the central banks in the world are tightening policy into growth. So that's a good thing. That is why, yes, the stock markets are adjusting, but not crashing like crazy. So what we have seen so far, a lot of central banks have already moved higher, the Fed being one of the more aggressive ones. But really the stance is towards tighter policy. And the ECB is the only one that's still at 0% for good reason, of course. Bank Indonesia surprisingly has said they were going to tighten policy last year itself, but they have not done anything. So this is just to illustrate to you the tightening trend has already begun and it will continue. So the anticipation of tightening is very strong in the US. You can see here by the end of 2022 this year, the market is anticipating at 3.5%. And in Europe, by the end of 2022, right here, is expecting 1%. Let me tell you, this is too aggressive, okay? So this is way too much. It's way too much an expectation of things like inflation is going to fly. So if inflation were to start falling, this particular expectation by the Fed will pull back. Now, why this is important? We came back to the hand, right? So now the Fed is here. So if these bars were to fall, this yellow bars were to get lower, that means this is going to go down. That means the dollar is going to weaken, and that means the ringgit is going to strengthen. This also might fall actually, but really the ECB has not done anything yet, so don't have to worry so much. Australia will continue in the same path, most likely, because it's a very good, strong economy. But what I want to point out here is this aggressive expectation of the Fed can pull back because I think it's way too much. So what has been happening in the world because of this, because of the tighter monetary policy, we have seen stock markets adjusting lower. I'm sure those who are with stocks are just like me. It's like, oh, headache, why are you falling, right? Doesn't make sense, right? So again, Malaysian stock market fell very sharply at the end of last week, and that was, at the end of the week before, after the US CPI numbers, which caused the dollar to jump, yields to jump, and the Malaysian stocks fell. So again, it's a proof to you that nothing happened domestically, and nobody lost their government position. PM didn't, nothing happened. There was no pala petaka kat sini. At the end, but it's basically the US market falling and causing our market to fall. So don't really lose confidence in that sense. But yeah, if you're losing money, very hard to see. But let's see here. You see here, after the COVID, a lot of stocks actually steadily gain. The one in brown, Jakarta Stock Exchange would be the best one. It's one of my longer term recommendation, but now may not be so much. But you can see here that the Bursa Malaysia is the one that has been the underperformer. So even if you see here logically, the underperforming guy might be the one that you want to buy, right? But also at the end of the day, we also want to notice that the US stock market has massively outperformed because they have stimulus, they got very easy money. And the adjustment lower in the US stock market is it's logical because the magnitude may be the same and need not result in the local markets falling too much. So at the end of the day, this kind of a sharp decline, it can continue, but it actually represents a good buying opportunity because at the end of the day, we have seen the tighter monetary conditions is basically going back to how we were before. As you can see here, right? The policy rate cut by the Fed, this brown line, sharp cut here because of COVID, now is back to pre-COVID already. So how much more can you go, So we have looked at this, and now we look at the bond yields because US bond yields have moved sharply higher, and that has pulled all the local yields higher. You have the UK yields, you have the Australian, the Malaysian, and the Thai. I didn't put the Indonesian one yields here because the Indonesia yields a little bit higher on top and will cause the chart to look very bad. But Indonesia itself, if you are confident on the currency, and you're confident on the economy, I think the Indonesian government bonds actually are a very good buy for very good return. But why am I pointing this one out is, you see here, the sharp fall in yields during the COVID time, now they have recovered. So that means the yields in Malaysia actually exceeded the yields that we usually see over since 2014, even way far back. So just by looking at this and by seeing our economy is fine, the Bank Negara might tighten slowly, only inflation may not fly like crazy. So that would actually mean that it's a good buy. But let's see, why am I talking about inflation not going too crazy, right? So the reason why the Fed has actually, the US stock market has really fallen, because you see here, the Fed has tightened aggressively, but oil prices are sharply higher. So that means the oil prices sharply higher has caused inflation to move up. So inflation moving up doesn't actually cause the stock market to fall, right? It's just whether it's too much of inflation causing a pullback by the central bank. And the real impact onto businesses is not the central bank policy rate, but the signaling by the central bank to push the entire yield curve higher. I was talking about yield, government bonds, how it affects real businesses. So if it pushes the entire yield curve higher, that basically tightens monetary conditions. And if stock market falls also, that tightens monetary conditions. So far, with the US yields higher and US stock market lower, US financial conditions are already tighter already. So if you're saying, oh, it's going to tighten some more, that means the chart I showed you already, the yellow bar, that has to come through. And I'm expecting it not to be true. So the oil prices have been driving the thing up. So that means oil prices are very important, especially commodity prices and everything. So when it comes to Malaysia, we talk about inflation being very high, medical, education. The key difference between those two sectors is that, when it comes to medical, you can't go shopping around. If the doctor tells you, hey, bro, you sakit, you must pergi operation. Then you say, no, I'll go see another doctor and I'll see how much is price. So when you are a captured audience, they can charge you like nobody's business, inflation can fly, and you're still stuck with it. So that is why medical is something that the government really has to be involved in, because there's really no freedom of choice. Not like investments. You can come to me, you can come to our other panel over there, you can shop around and everything. So when you talk about competition, it doesn't exist in the education sector and also like, the medical sector. Education sector a little bit because you got a lot of private universities, so that really helps a lot. But at the end of the day, Malaysian inflation itself yesterday was up to 2.8%. You can see it's quite stable. It was up nearly 5.0. So most of it because of like headline inflation. So this is driven by oil prices, right? And also it is driven by ringgit also weakening, remaining weak. So if both of these were to strengthen, that means inflation might actually be stable or moving lower, right? So that is why I may not be that fearful of inflation. Yes, we are paying more at almost everywhere. But mind you, nearly 6 years ago, we were talking about Milo prices going higher, a lot of things. So for perennially, I've been hearing inflation is a problem for everyone, which is true. We have limited income and everything. But when it comes to the market, pure market observation, there will be little push upside for inflation, which means when it comes to the bond yields, there will be little push upside also. If it does happen, that means Bank Negara have to tighten policy, which will slow down economy, and therefore that will also limit the yields moving higher. And they have already adjusted also. So where is this inflation coming from? It's from supply chain disruptions, the global supply chain pressure. So if China were to open up, things improve, there is a lot of money to be made. Shipping lines would actually find their way to increase their capacity and everything. So this global supply chain pressure also will fall. Then the other one is when we come to Malaysian inflation itself, you can see our core inflation has been very much stable, slowly creeping higher. And that is the number you want to watch. And most of the inflation contribution is from food and non-alcoholic beverages. You see, last time when oil prices were very high in April 2021, or there's pressure on oil prices moving up, and our pump in our pumps, it's reflecting real prices. This caused inflation to move up sharply higher because of transportation costs. So in the past, most of our inflation is driven by transportation costs. This time around is food, so it's a replacement. So 95 RON has not moved higher, despite 97 moving higher. If RON 95 were to move higher, then inflation is going to go up. So that is one of the key you want to watch out for. So going forward, if you have realized that driving inflation is food, and everything, but also at the same time, we were worried about raw 95, right? So that means oil prices would have to come down in order for us to not worry so much about inflation. We have seen geopolitical tensions going up. Recent oil prices moving higher is not only because of demand quite strong, but because of the Ukraine war. There's a lot of disruption to oil supplies. So at the end of the day, prices already reflecting this, and going forward, if I'm getting some, this is speculation, let's just say speculation. Saudi Arabia has been reluctant to increase its supply, correct? It's because of the killing of let's not talk about it. Okay, Saudi Arabia has been reluctant to release oil supply because President Biden has said in the past that, we don't want to talk to them because of what has happened before, killing of the journalists and everything. But now he's going to visit them. And also there's a relationship thawing between Turkey. So there is very much expectation if the meetings go well, then Saudi Arabia would actually increase its oil production and pull the oil prices lower. And also at the same time, we have to look at the Ukraine situation. That it is coming to a point where it's becoming a stalemate. Russia is not going to give up. So at the end of the day, they'll have to come to a point where Russia, okay, like you take the eastern part, not say take, we'll have referendum to see who they want to join and everything. And that would solve it. But really, both sides are locking in. So the only important thing about Ukraine right now, yes, human tragedy is very bad, but for investments would be whether the ports can open up and the grains can go through and everything. But mind you, when it comes to grain prices, wheat prices has shot up earlier in the year. It actually has fallen down. Same thing with gas prices also. So when you see headlines talking about banning oil, banning gas, and wheat prices being blocked and everything, it has actually been reflected earlier. Now it's actually falling down. We have to watch that, but the market doesn't seem to be concerned about this currently. So when it comes to higher oil prices also, it can actually be positive for Malaysia, because you can see here, we are net exporter right here. Of course, Brunei would be the biggest benefactor, whoever in Brunei would be very happy. But again here, when we talk about inflation, you can see, right, this is early in the year, in March over there. Price of rice actually quite flat, so we makan nasi kan, bukan makan roti hari-hari kan. So macam tu, we go mix nasi, lauk all still the same, only chicken price gone up, but rice still the same, right? Of course, you go banana leaf, they give you the banana leaf, the price gone up lah, but that one because of the sayur, not because of rice. So yeah, if we talk about inflation going up, I've just pointed out to you that oil prices can come down, commodity prices are actually adjusted lower, wheat prices adjusted lower, gas prices also adjusted lower. I just saw the chart today. And for us, rice price is actually quite flat. So we are okay lah, Then when it comes to the region itself, headline inflation around the region has actually largely been quite flat. So concern here also not much. So what does this mean, right? So the Fed is actually tightening because they have inflation, that is causing the global market to worry about, financial conditions getting tighter. But there is a concern for the global fellas. Domestically, our inflation is okay. Bank Negara might have to tighten a little bit to recognize the better growth situation. But it's not because inflation is going to fly like crazy. Of course, they have to be concerned about ringgit being too weak. But ringgit being weak is also a good thing, because you see a weaker ringgit can actually help with exports. You see our export numbers here, it's nearly about 120 billion, 140 billion. And a lot of them is electronic and electrical equipment. And there are some resource-based ones also. But this is the major one over here. Yes, the trend is lower, but a weaker ringgit has always been benefiting. So you can see here, so whenever the ringgit is weaker, it will benefit stocks and benefit Malaysia as a whole. But if too much of weakness, not good lah, it will cause a lot of pressure. Okay, so Bank Negara might tighten policy, but not so crazily actually. So even if you look around the region, if you want to invest in the region, also looks very good. Growth is very fine. This is a long-term projection over here. I think it's by Asian Development Bank. I give them credit for that. And at the same time, we are also seeing that China, after is reopening up, they have to shift their strategy a bit. But I think they also know that they cannot keep this up. There's too much of imbalances internally. That is another longer discussion. We don't want to talk about that right now. But I'm putting this here is because China can move back up. I'll talk about China a little bit later, but China can move back, give another source of growth for us. So really, developing Asia is actually pretty decent, not so bad. So this recent decline might actually be a good buying opportunity. So Malaysia itself, these are Bank Negara slides. You can see our growth has been pretty decent and nothing really has fallen off. So the stock market is not really reflecting reality more than anything else. And the contribution to growth has been services, manufacturing. So these are two, manufacturing especially will benefit from weaker ringgit, right? So in that sense, this can actually benefit more. And agriculture, now with prices higher, you might see agriculture investments increasing. So this can also benefit growth of Malaysia. Construction has been pretty weak. So going forward, people going back into office, or just now earlier, we're talking about investing in property would be the best long-term kind of, not best, one of the long-term solutions. Construction, if the returns, then another support for the Malaysian economy. So when it comes to consumption, has been the basic driver of our Malaysian growth. That is expected to be so. I go around the malls, I go around Hartamas, I cannot find a place to sit. So consumption is still continuing, everybody there also, like just now earlier, the perennial fight between investments for the long term and consumption for today. So right now, if consumption for today seems to be very strong, we've been locked up for 2 years. So we want to consume first, then invest later. But investment also important. So this will also realize in Malaysian economy being quite decent. So the other thing also, financing is very important. I mean, yields have gone higher and everything, but this loan growth have actually been quite strong. So going forward, as things improve, things are good, and that would result in business actually continuing to invest. And banks basically have very high loan loss reserves. So that can, as the economy improves, they can reduce that and also result in some profits over there. But also they have such high buffers, they can actually take on more risk going forward as things improve. So what does that mean actually for us? You see, Malaysian yields have moved up. So, but Malaysian inflation has actually come down around 2.8%. But what I'm trying to tell you here is Malaysian yields have already adjusted to a fact of higher inflation. So if inflation goes up, it may not cause the US Malaysian yields to go up. So remember, I was telling you earlier, yields go down, the price goes up. So this would be a good place for a good investment over the medium term or longer term. Lock in the yields, you can get 5, 6, 7%, 5, 6%. So that's why I want to point you over here. The higher inflation may not result in Malaysian yields moving higher still, which would be negative for you. And when it comes to Bank Negara also, you can see Malaysian yields have already adjusted higher. And that means Bank Negara, although they were to raise rates, they might actually result in the yields moving lower because it can actually cause concern over growth or anything like that. That's the narrative of the market. It may not be real, but the narrative of the market very important. And Malaysian government, Malaysian central bank has a long way to go back to normal, about 50 basis points, maybe a little bit higher. But that does not mean the economy is going to go off. I already showed you the details of the economy and everything, right? So let's just move on very quickly. That means at the end of the day, Malaysian equities and Malaysian bonds are a good buy. So the yields are high, buy. The market has adjusted lower because of external factors. Domestic factors look good. It's a good dip buy. So you buy a dip here and target 1,006, get out. But for those who want to have longer term investment goals, then buy now also quite good lah. But really, the most of the weakness of the currency of the stock market is because of the currency movement. So we are anticipating the dollar to come back down, ringgit to strengthen, stock market to be better, domestic factors to be good, yields have adjusted higher. So both also good buy lah. Buy ringgit, buy bonds, buy equities. Then also when you look at the absolute value basis, you see the stock market has fallen all the way down here. This is the COVID, of course. Now it's lower than where it was at this point. So this is a good dip buy opportunity, and PE also looks attractive. So we don't want to talk about, I think I'm already running out too much time already, but this is basically showing you the inversion of the yield curve and signaling recession. I think we will be putting it up, and we can look at this chart. Doesn't mean these are the peaks of the stock market. Doesn't mean inversion of the yield curve is going to cause a recession. Equity markets can actually go stronger. This slide takes a longer explanation. I would just want to point out to you that an inversion doesn't necessarily mean it's going to be in a recession coming up, and stock markets can still actually continue gaining. So what about the Fed? They can tighten, but really they are tightening into very good strength. Unemployment is very low. You see, they can tighten more and unemployment continues falling. So they can still move higher. It doesn't really cause the economy to fall off the cliff. And even GDP, you can see that the GDP has jumped crazily and it's actually at a very nice keen yield level. And if it does move down slightly, no big deal actually. So this is just talking about 80s when the Fed actually went go quite crazy. But you can see once the Fed goes too crazy and they start cutting rates, it can actually cause the stock markets to go higher. So that means right now with the Fed poised to tighten policy, yes, you can see some more downside in the stock market. So deep buying, you can look for more opportunities, but you can start collecting right now also, in that sense. But really, it just means that the central bank tightening too crazily can cause equity markets fall, but does not mean it's going to be there forever. It will come back up again. And now we just go to our investment recommendations over the longer term. So we have actually spoken about tighter conditions, not big concern. Malaysia growth is pretty good. Inflation is high, but yes, it really depends on commodity prices going higher. But really at the end of the day, it can actually come back down because expecting oil prices to go up. Commodity prices have adjusted lower. Only biggest concern is the Ukraine situation. Barring that, everything else looks pretty good. Inflation may be pulling down a little bit, but it'll still remain quite high. And also at the sense, growth also pretty good. In the US, you have a lot of spending, consumer spending, government spending, infrastructure spending and everything. So for the long term, if you want to invest in any market, it will be the US market, like here. So the US market since 1990 has actually going higher, now has adjusted lower. And you can see many periods of adjustment lower are just good opportunities to buy. This orange line here is the DAX, I think. Yeah, I didn't put in thing. Yeah, this is the DAX, and this is the, what you call that, Nikkei, and this is the Asian stocks. So you can see that the US market beats all of them. So if you want to have a long-term investment, perhaps a global portfolio may not be a good idea because it includes all of them. So these fellas down here will pull down your performance. So if you have certain amount of money, which you can, take a bigger risk, you put a chunk of it in the US in dollar, because ringgit also has a propensity to weaken over the longer term. So this will be a good long-term investment, especially after the market has adjusted lower. You buy the index itself, or buy the good bellwether companies. The index would be a good choice because as the members disappear, they will replace the members, right? So the index will be stable. But say if you had invested in IBM 30 years ago, everybody thought IBM would last forever, right? And now we don't even talk about it. So that's why you have to be careful in individual companies. I'll recommend the index per se. Then in the intermediate itself, I would say China looks good. You see here, recently, everybody has been falling, right? I put this green line is the Kospi. The Korean stock market has fallen, but China is the one that has gone up. Why? It's because we look at the price movement. China prices have adjusted sharply lower because of their lockdown and everything. Now they're reopening. It'll be like the same reopening play that we had. So China stocks would be a good one for an intermediate one. Again, buy the index, not individual stocks, and then with a point to actually gain. Be exposed in yuan because the yuan has actually weakened quite a lot. But if you're not comfortable with the yuan, ringgit kind of funds with China exposure would be a good one. Please stay away from tech because it's too much a headline risk, but it's good returns, of course. But overall, the index would be a good buy. Next one is Australia and Indonesia. Australian stock markets have adjusted sharply lower. I think it'd be a good chance to get in there because overall global growth would be very well. But this will be not a very good return kind of play. It's more like, steady, safe, not too crazy kind of thing, unless you really expect the whole global economy to fall off the cliff. This would be a good investment for targeting about 8-9% return for the year. I just think Australia would be a good, compelling buy currently. And Indonesia, with its huge population, people, during the COVID time, right? When headlines hit Thailand, Singapore, Malaysia, these stock markets have hit quite a lot. I can't say decline. But Indonesia was fine, even though they had bigger numbers, they had more virus, more death and everything, but the stock market is fine. Why? It's because when you read the newspaper, they always talk about Malaysia, Indonesia, Malaysia, Thailand, and Singapore. They hardly talk about Indonesia. So you see, the media can actually influence a lot of the market movement. So these two would be a good kind of a yearly play. India would be a very good long-term play, but you have to wait until the price adjusts sharply lower. It's just way too much of performance here, but this would be something you want to watch out for. So at the end of the day, our market observation, what's the time already? Give me 3 minutes to finish up, 12:10. At the end of the day, we have seen the dollar gain sharply on Fed aggressive expectation. We think it's too aggressive, so the dollar will pull down, and that means the ringgit would actually gain. Higher inflation and higher yields have driven concern. I think we're expecting oil prices to move back down. Commodity prices have moved lower already. Supply chain disruption will adjust itself, and therefore inflation will move down, and therefore the Fed expectation will be pulled back also. US yields have moved sharply higher. Unless inflation is going to shoot up some more, then yields can go up. But really, yields have moved sharply higher even in Malaysia, reflecting the anticipation of tighter monetary conditions. So even if the central bank here were to tighten more, doesn't mean it's going to cause yields to go up. It actually can cause yields to come back down, because the narrative is such that, oh, if central bank were to tighten, that means growth is going to slow. So you can use that narrative for your benefit. And then KLCI has actually sharply moved lower because the ringgit is weaker. So if we believe the ringgit would turn, and therefore the stock market also would turn. So scenario analysis, basically, we have mentioned there already, the policy tightening and the Fed will pull back will all benefit both Malaysia. And so finally, the investment outcome for near-term gains would be China and Malaysia, short-term. US market can see a little bit more further downside because of the aggressiveness of the Fed, but that would be a good place for you to buy and keep it for the long term, very long term. Yeah, that would be a good one. And then bonds would be a good one to buy right now because yields have adjusted higher. So when it comes to bonds, you can expect around 4, 5. You know, if the yields were to fall sharply from here, then 6% return is very much in the cards. In the past, when yields fell very sharply, you know, but like say from 3.2% down to 2%, that has caused the bond market, the funds to perform like 10%. So in that sense, you can get some good returns here or lock in some good returns with limited downside. Stock market has higher risk. Bond market, with the yields already adjusting higher, the risk is a lot limited. Currency, everything against the dollar. So just beli apa-apa je, jual the dollar. But since we don't have the dollar, keep in ringgit lah. Ringgit is pretty good. So that's basically it. I will leave it at that. Is there any yes, thank you very much. I will leave it at that.
Okay, thank you very much, Suresh, for the wonderful presentation. Very powerful, very in-depth, very informative. There was never a dull moment where you shared all the slides. Memang very, very deep. So I open up the floor to anyone who have any questions. Just feel free to type in your question in the chat box. Then we address them to Suresh for our answers and for answering the question. So please, before we end our presentation. Sorry. So before we proceed with the Q&A, if there's anything you'd like to share or anything you would like to feedback to us or anything you'd like to ask our speaker Suresh on investment, on the market outlook, anything you're not sure or you don't understand from his detailed presentation just now, feel free to ask. But maybe from my perspective from what I listened to your presentation and everything, is Malaysia still okay to invest in, or should I expand my horizon to like you mentioned, for the long term we have US market, for the medium term we have Indonesia, China, Australia, for the short term also we have India and whatnot. Is Malaysia still a viable investment that we can put our money in? Your thoughts on this?
Yes, I think so. It's because the Malaysian stock market has adjusted so much lower already. And we're expecting ringgit to strengthen, and the recent dip is based on external development. So the external development can adjust further some more. So if you buy stocks now, you can see a little bit more downside, but it's compelling right now to buy, because if you look out, the economy is doing well, central bank is doing a good role. The only negative thing is like people talk about the government, but you know, the government has been shifting left and right the longest time, but the roads are full, you know, there's no potholes anywhere. The government agencies are running pretty well. So I actually have very high confidence, good confidence in Malaysia. I lived in many countries before, worked in many countries. At the end of the day, KL is my favorite. I know people can like that, But really, it's really nothing much to really complain. I mean, the reason why the stock market has been badly performing is because anybody that bought the market at the peak when ringgit was at 3.8, that is the peak. And then right now ringgit 4.4, and then that's why the stock market is like that. So we expect ringgit to turn, and then so you want to buy right now. For the very long term, yes, US would be the one. And Malaysia, I think Malaysian government bonds would be the good choice. But you want for short gains, get out at 1,006, and then maybe we have another session again, and we can see whether we continue from there. So for now, buy 1,006, can ride to 1,650. Buy the index, you can get 10, 15, 20% gains like that from there, right? Straight away. So why not, right? Take the money on the table if you believe in my expectation. So that is why. So these two are compelling reasons. And of course, China is another compelling one for quick gains. But at the end of the day, you have to be aware of the market, or just come to one of our professionals here, even the one earlier speaking. I'm sure they monitor the market very closely and recommend you the adjustments as and when is possible.
Okay, thank you much, Suresh, for the wonderful answers. So moving on, we have a question from Suhairi who asks, can you consider the political risk to be one of the factors that affected our current stock market going downtrend?
Yes, sentiment-wise, of course. But again, remember, Malaysia's stock market was at its highest when the new government took over last time, right? Pakatan and everything. Confidence on the government was very high at the time, but the stock market continued falling. Again, that is not because of things are bad. It's because the ringgit has been weakening, foreigners moving out, slowly moving down. And again, you'll come and say, hey, ringgit weaker because of Malaysia government, right? Logical point of view, of course. But I pointed out earlier in the slides that the weakening of ringgit is mainly an artifact of dollar strength. Around the world is the same thing. Look at the yen, 140. It was around 100, 03, even below the 80. So is it because Japanese government is not good, that's why the yen is weaker? No, it's because yields are higher, dollar is stronger. Same thing with Australia also. So when it comes to market, as long as the shift in government does not affect the bureaucracy, then it's okay. But if there's a major impact on the bureaucratic environment and everything, huru-hara, on the streets got a lot of tensions and everything, then it'll affect the market. And I can give you an example of Thailand. We've had macam-macam Thailand,
baju merah.
And everything. But the bond market performed well, stock market performed well. So in the sense, there is sentiments. So whenever there's problem with the government and everything and cause the stock market to fall, belilah.
Okay, thank you very much. Thank you very much for the wonderful analogy. So we tend to learn from our past experience. We also tend to look at other factors. So Malaysian, our politics is just part, plays a very maybe minimal part. But as long as the policies are doing well, as long as our country's fundamentals is doing well, so I think that's one of the things that we need to look at rather than we just focus on one or two bad issues. Okay.
Most important, Bank Negara actually.
Yes.
Bank Negara paling mustahil lah. What they do, how the policies they do, that affects the financial markets directly. So Bank Negara is the one that you might want to watch. And I have very high confidence in Bank Negara, not because I worked there before. Oh yes, it is because I worked there before. I've seen the way they work. Of all the places I worked in my life, Bank Negara, I don't want to disparage my previous employees, but Bank Negara environment is very professional. They work very hard. They take their jobs very seriously. And so I have very high confidence in how they run things. Okay,
thank you for the insider information on how our bank is in the inside out. So maybe we can move on to our next question from Emily Yap, who asks, what is the future? Is Asia the future of investment? And what is your opinion on the China market? Maybe you have some comments on that?
Yeah, China market mentioned earlier. Right now is a good short-term buy, maybe not long-term, but good short-term buy. Have a target, say 10%. I want to gain 10%, get out. Once you hit target. What I've noticed for those who have invested in China in the past is that they gained a lot. Last year, right? Gained a lot, right? And then they say, hey, can go some more. So 100% gain, they kept on holding at it. And then at zero, they got out. Okay, jangan buat macam tu. Must always, you have a target return. For this short-term investments, have a target return and a cut loss, but have a target return and get out at there. If you gain some more, maybe you want to get back in. But, if you have money, even same as Bitcoin kan, banyak ramai kawan, say, make a lot of money. I say, then get out of the market. Say, tak nak, can go up some more. Then you kaput. So for China, buy now, get out, and then look back again. And Asia, yes, is good, but the problem with the Asian market is it just goes like this, because of the influence of the currency, influence of overseas, influence of geopolitics, macam-macam influence. So you have to be, you have to look at certain funds, and you cannot be like one team for the rest of the perpetuity. So right now you want to see, oh, Indonesia looks like a good buy, I'll get in there. Thailand has already gained already, so I'm not sure what you can get in Thailand. So really it depends on strategically, but if you buy the entire Asian index also, look at the Asian fund. If it has fallen significantly, then buy. If it's still quite high up there, then perhaps you want to watch out a little bit, because recently there has been a lot of adjustment and provides compelling purchases. But this you have to watch, it's not something you buy and shoot and forget kind of thing.
Yeah, correct. I mean, we have to be actively involved and we have to be realistic lah. Like for example, if we hit a certain numbers, like for example, we already hit our target, then just get out. Maybe take a pause, or maybe take a trader, or maybe reward yourself based on the returns, based on your whatever ROI that you have got. Then maybe it's a good time to relax. Then maybe when the time is right, then you go back in. Okay, thank you very much for the wonderful information. So we have next from Emily Yao. I think she still has this issue or maybe a question that, okay, in that case, where should we invest for the long term? Let's say we want to retire maybe another 20 years, 30 years, 40 years. So where should we invest our money?
US market.
US market lah. Okay.
I mean, keep your EPF money also, please. Yeah. I know it's bad for my business, telling you guys to keep in EPF, but I have to be honest lah. It's good return, steady return, no losses. Your excess money, you can keep in deposit, but you only get about 1.2, 1.5% return. But if you put in the Malaysian government bond market in the funds, you get 4-5% actually. So that is already an excess return, and that could be your long-term investment, at that steady return to complement your EPF return. Other than that, I've also mentioned for the very long term, just be exposed to the US market just because of its performance. So any sharp decline in the US market, it would be a good opportunity for you to add to those positions.
Okay.
Beyond that, it looks very tough. If you have a global fund, which I think a lot of people recommend, the other underperformance of other assets can actually pull down your overall performance. So you have to be focused a little bit in each individual portfolios, not one whole global portfolio that you give to somebody. That's what I observe actually over the time. So yeah, the long-term US market, steady returns, bond market.
Okay, so meaning to say, let's say we take US market for our benchmark. So meaning to say US market can go beyond the 14,000, 15,000. Let's say our Dow Jones index can go beyond 40,000 points and everything. So meaning to say there's no sky is the limit lah for US market.
Depends on how long we live, right? So it also really depends on, like, if you look at the world, the US dominates everything. The Zoom call that we're having, it's China company actually, not US, but almost everything, their culture, the money, the financial system, the political system, they dominate a lot of things. They're also quite competitive. So overall, these companies will continue growing as the global GDP grows. And we have come to a limit, maybe come to land, but then we have real estate online. So many things that we do online right now. So when we talk about inflation, we also forget to see that our cost of living has dropped significantly. I don't have to go to bank to pay bills anymore. Yeah, I don't have to do so many things physically. I can do everything online. The efficiency is high. Nowadays, people buy a phone every few years, $3,000. Mana boleh dulu? I want to buy a PC also, I cannot have to think 3 times. So yes, inflation is higher, but you're consuming more. So, that means if you're consuming more, there's more propensity to consume with credit and everything. That means company profits will continue going higher. And if you have inflation, naturally the profits will go up, no? So that means that the stock market will continue with it. The only problem is excess inflation. So like recently you have retailers in Malaysia like Aeon and everything, their stock has fallen. It's because the input cost has gone up. So that is the little part over there. But overall, if inflation is high, inflation is decent, 3 to 2%, it erodes the debt level. It has a natural multiplier for profit, for revenues. And also it allows the company to continue growing in perpetuity. See, in Japan, when they have deflation, negative prices, a lot of problems. Yep. So not necessarily be a bad thing. And yes, stock markets can continue moving higher unless you are expecting the only time the stock market can actually start going lower if the global population becomes too old. That means you cannot consume as much anymore. You have to save and everything. You cannot have multiplier effect. So countries with very high population, young people, are very good for propensity for very long term, because the productivity will go up and everything. So that's the other thing you want to look out for. So in a sense, the global population, it's okay lah. US uses the global consumer base in order to support their companies. Sure. So in a roundabout way to answer your question is yes. Sky may not be the limit because I will not live that long, but it will continue gaining based on the fact that inflation is there, the dominating industries are there, and the profitability and the revenue streams actually will continue improving.
Okay, thank you much, Suresh, for the wonderful explanation. So we move on to the next question from Bhuvan. Okay, he wants to know the answer for what's your outlook for REITs market in Malaysia.
I'm positive actually. The problem is we don't have, I looked for a fund that only in Malaysian REITs. It's all like, mixed with Singapore, I'm not confident in the other REITs market. If you can find something that is very Malaysian based, especially look for the offices REITs actually. It's because I think maybe you might have missed it already. It's because the sentiments was very negative. At the end of the day, the way I go around, nobody bothers with as much as mask and everything anymore. Malaysians are berkelompok, berkumpulan, right? We gather in groups, we feed off each other. So returning back to the office is natural. And for men, it's just a reason to escape the house. So in that sense, people will go back to the office, and yes, the overhang is there. But if the REITs, if you look at any REITs and you see that it's actually way too depressed based on what is happening right now, then it's a good buy. But overall, I think it's a good for steady returns. But it has to be only Malaysia. I don't like Singapore, I don't like Thailand, I don't like Indonesia.
Yeah, because we can see the occupancy maybe going down, but moving forward, maybe the occupancy will go up. And also, as you can observe lah, I mean, whenever we go out during the weekends or whatnot, we even go to our tourist destination and everything. I mean, the shopping malls are all full. I mean, even the restaurants, you have to queue up to get your seats and everything. So it means that people are, I mean, we are back at our pre-COVID level, so to speak, or even higher. Because during COVID we don't spend too much. We save a lot. Then with government help, assistance and everything, so we have a lot of savings. So this is the time we call it as a balas dendam lah, kan? 2 tahun kita tak spend, so now it's about time we go travel lah, we spend a lot lah and everything. Then comes inflation pula. So inflation is intention to curb your spending and to curb your need and expect you to increase your savings as well. Okay, so we move on to the next question from Emily Yap. Can Malaysia's dividend fund be considered for a long-term investment? Okay. What's your thought on this?
That's the good question, because like Tenaga has good dividends, kan? Tapi stock dia jatuh. Non-stop jatuh. So maybe banks lah, for when it comes to dividend, you can buy a dividend fund for the longer term. The individual stock performance also affects the fund, no? So in that sense, banks have actually seen good dividend returns, and the prices continue to perform. They are of course exposed to the index itself. So because the reason why I have some difficulty in answering your question, because your question is a very long-term in nature kind of question. But when I look at the stock market, it's very short-term in jumping up to 2006. After that, I may not know what is going to happen. So if you're going to invest in dividend for long-term, you must ignore the stock price component if you can do that. and look for a good dividend. Like Nestle has been very flat, right? 100 over bucks. Tapi dividend return 1.6, 1.2%. Not much, right? So now what's your question? What are you going to do in that kind of situation, right? So when it comes to dividend, perhaps look for companies that are in an improving environment and providing dividend, and banks. So what industries are improving? Look around. So we just, Eza and I mentioned restaurants are full, places are going around, people are driving. So consumer-based kind of thing, restaurants, car producers, or things like that. But again, this all you have to watch very carefully. So because the price component is very important. If you can ignore the price component, tido for the rest of your life, banks, finance companies are the way to go.
Yeah, correct. Okay. So I mean, we have to be aware of what's happening, what's going on all around us, what happening in Malaysia, what happened in the global market and everything. Okay, so we have the next question from Emily Yap. So maybe we can invest in unit trust and being managed by fund managers. So maybe you can also promote yourself, your Red Vest. Maybe you can help answer Emily Yap's question.
Yes, the slide where I show the investment recommendations. Yes, you can come to us and we will find the unit trust for you. Well, we actually have a slide on that, but because the reason why I cannot show you the slides is because it has certain fund names in it. I think we can't do that for some legal purposes, which I've heard before, not from Eza, yeah, because they didn't pay us to promote them, right? So that's the thing. So yeah, there are certain ones that I would say for short term, you buy the KLCI index, may not be the aggressive funds, because I just thinking of the KLCI index. Surprisingly, if you buy the KLCI index, you would have performed better than aggressive funds over this year. So you can buy the KLCI index funds. I made huge amount of money on oil index, on oil funds when oil prices were very low, but now you have to short those oil prices. But so there are funds that you can buy: bond funds for steady return, KLCI index funds for quick return, and overseas funds, Australia for steady intermediate return, China for quick return, and US in particular, US funds for the long term. So those things, you have a lot of options. And we at Red West provide you access to all these options that you have. So if you are a retail investors, we have access to all the local Malaysian funds. And if you're a foreign, if you want to invest in overseas, we also have access to a selection of hundreds of funds that you can invest to, based on what you think. We sit down and we find out together what you think that you want to invest in, and we put in together with our eyes wide open. So it's the part of a consultative process, and read every day. I mean, I personally write, or Red West, we write market commentaries on a periodical basis. We paste it on our website and on our LinkedIn page and our FB page. Please take a read. And if you find any questions from there, just drop me a line. I can answer it, and I think we can start a conversation and find out together where we can invest, because it's not my opinion that actually matters, it's your opinion. So, must understand that. And I think earlier also, our speaker was mentioning, Saida, right? Was mentioning, 8% return, 11% return, boleh ke? So yes, please understand, if it's too good to be true, it's too good to be true. Adjust your expectations accordingly.
Okay, thank you very much, Suresh, for the answer. And just a reminder for all of you. So in case you want to connect with someone from Red Vest, feel free to fill in the form. We already paste the link on our chat button. So just fill in the form that we connect you with somebody from Red Vest. Then you take it from there. Be it investment, be it financial planning, be it whatever. So we can, because Red Vest is not only on investment, but they also holistic financial planning. They also have everything. So please, by all means, just fill in your details. Then maybe we take it from there. Okay. So thank you very much, Suresh, and thank you everyone for the wonderful, half a day. So yeah, very fast.